Good morning, everybody. It's Tuesday, April 22nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets here at May corn down 2.5, 479 and a quarter. May soybeans were up 4.5 at 1034, and May Chicago wheat was down 4.25 at 534 and a quarter. Yesterday afternoon, we got crop progress and conditions. Corn 12% planted. That was against 4% last week, and just slightly above the average at 10%. Soybeans 8% planted. That was up from 2% last week, and 3% above the 5-year average of 5%. Spring wheat plantings 17% versus 12% on average. And the winter wheat ratings dropped 2% to 45% in the good to excellent category, still higher than the 5-year average of 41%. What we know this morning, yesterday, we had another solid week of export inspections, certainly on the corn side, which was a good sign. And then, obviously looking at planting pace, we're on pace. Things look good. Supposed to get a little wetter through portions of the Midwest here for the next 12 to 14 days. So we'll have to keep an eye there to see if we keep rolling at a good pace there. So with that, guys, good morning, Ben. Maybe a few thoughts to get us kicked off here this morning, and then we'll throw around the room.
Justin and I talked yesterday afternoon, and corn has hung in there nicely considering when you look at all the outside markets, but it hasn't been able to extend any gains as of yet. It's May options expiration week. There's quite a bit of open interest in the 470 and 480 calls. Really a ton open in the $5 calls. I don't know that that's on the cards for this week. But it looks like we want to, kind of see what's down below, at least, and looking at the overnight stuff. All the crop still has a decent story. Won't be long until we have some Safrinha supplies. But I do think that a lot of that will get sucked up in South America, as they've been extremely tight on corn. So we'll see. I think that we're going to have to get through options expiration, and we're in that transition of really maybe having some concern one way or the other. Obviously, nothing warranted yet on planting delays. We mentioned yesterday we've spoken to some farmers. I think primarily in the Western Corn Belt, they were cruising along pretty good. Eastern Corn Belt, just getting started, but in talking to customers, not a lot of concern yet on delays. So it's like maybe a wide chop. I'd be interested to see if they'll break May into first notice day, or if they won't. That's been kind of a typical trade as we head into the end of option expiration month and delivery becomes real. So I would keep eyes on that. May July's traded basically 6 to 8 over the last couple of weeks. Slight blip to 8.5 and a slight blip to 5.5. I think it's trading about 7 3/4 this morning. So we'll see how that pans out, and maybe we can pick up some volume as option expiration gets a little bit closer and people have to clear up some positions. But volatility, intraday volatility, and volume has been just really, really poor the last 6 days. So we'll see what happens.
Very good, Dustin. We we talked a little bit about this yesterday, but throughout the day yesterday, we made a 3-year low in the dollar index. We've since rallied here just a little bit this morning, but certainly, looking at that dollar index back below, slightly below 98 yesterday was pretty interesting to see how our markets reacted.
They were still negative yesterday. I think there's a fine line between why the dollar breaks. If we're worried about outside market capitulation and an overall weaker economy in the process, that's going to affect many things negatively, including grains. But overall, just that direction of a dollar denominated. Dollar weakness can lead to dollar denominated assets that rise. Interesting this morning, the real really has kind of been more tagged to the dollar. I mean, a lot of that weakness in the dollar was also tagged with weakness in the real compared to other currencies around the world. And then today you're seeing the real rebound with the dollar. So it's like Brazil is kind of hitched to this horse here. So my personal opinion, I think, you're still you still really haven't factored for the potential of positive trade news in the current price. I know we're getting it planted. I know we talked a little bit about yesterday, like fast planting pace. We saw that in that report yesterday. Is that what the market is attributing a premium to the price action? However, what was the world worried that we weren't going to get corn and soybeans in fast enough or good enough? Is that going to take a big chunk of price out? I'm not necessarily convinced that that's the case. I know when things get planted on the ground, everything looks good. There tends to be an air of bearishness by growers, but I still think the real premium comes out once we get that look on the pollination window for corn.
Yeah, I'll throw this, I guess anybody, but I just, one observation this morning, looking at kind of overnight news, Vice President Vance had talks and meetings with India, and, there was, I guess, positive rhetoric out of the meetings, but the overall takeaway was that, in principle, we've agreed that we'll have a trade deal, sometime this fall. And I guess my question is like, what is, how quickly is this market, just psychologically want answers and finality to it versus like, it is going to take a while. Some of these deals are going to take an extensive amount of time to piece together. So you just wonder if there'll be disappointment from the lack of speed on getting these. I don't know if that's really a question or more just an observation, and see what your guys' thoughts are.
Well, I mean, equity markets are up sharply today.
Mm-hmm.
Is corn down anything to do with that headline? I doubt it.
They're not a big importer of corn,
right? And they haven't been, but they could be, right? They could be. Like China never had purchased more than 7 million metric tons from the U.S. prior to 2020, and all of a sudden they're the largest buyer overnight, 27 million metric tons. I don't think India is changing its diet at all or is required to import that much corn, but you may see an announcement where they have some sort of agreement on U.S. ag imports as a small sideline, but that's still a big step.
Or ethanol has been rumored too, that they could become kind of a bigger importer of ethanol because they've had rules in place that have limited that, and I think we've tried to come down hard on them on that front.
Right. And the other thing, we talk about, like, we're not really in a position globally for corn stocks to use ratio ex China for all of a sudden usage within the 25 marketing year, 25-26, without some real tightness potentially showing up if we don't have a really good growing season. I know we have 95 million acres slated in the U.S. and we're getting it in pretty fast so far, at least. But like one slip up, we have a 179 yield, a 178 national yield, and the world is extremely not in the position for stocks held outside of China for that. I know we're probably going to have a decent Brazilian corn crop overall, but I do find it interesting. The market's kind of laissez-faire on the potential that, like, there is potential for demand rationing, and it doesn't seem to be built into any sort of premiums that I can tell, at least.
Yeah. Any observations there, Justin, this morning?
Yeah, I would just say, the Safrinha crop does look like it's in pretty decent shape, and we are kind of ending April. So, May, June, you're 2.5 months to have, another big chunk of corn supply on the market. So I think that is also something that will weigh on our market potentially. We still have good export demand, right? That another couple of months of that maybe. So July DEES is still inverted 27.5 cents. So I think the risk is probably to the July contract. I guess it depends. It'd be interesting to see to Ben's point on how May, July acts. I'm sure farmers been selling a lot of flat price corn on this rally. As we get planted, a lot of farmers tend to sell old crop corn supplies too, once they feel a little confident about new crop getting in. So I'm kind of interested to see how that plays out, because we have been doing great export demand. Obviously ethanol, had some bumps the last month or two. But yeah, 460, 450 new crop corn. I just think we've kind of established the areas that are, really supported in new crop corn. And I think it's, certainly below 440 finds a lot of support. We still have to grow the crop. We're 12% planted.
Mhm.
So can't really celebrate that, mission accomplished yet. It's got a pretty wet forecast too coming up. So we'll see how that pace. I was actually surprised it wasn't higher from the rhetoric I was getting out of Iowa that a lot of guys are almost done planting. So I was surprised that, Iowa was only 18%, to be honest. I thought we'd be higher. So I'd like to see where, with the next couple of weeks unfold. Ben's point, May options go off this week. So that makes a lot of sense to me that we would be stubborn around some of these big strikes to not pay too many people. But it'd probably be choppy this week. It makes sense that we're not going to go make new highs. I was kind of hoping we would, but wouldn't surprise me that we wait till next week and see what happens. As far as the trade deals, yeah, I think, anytime you have such big moves in outside markets, the market doesn't have patience, right? So if the stock market wasn't having such massive breaks or these outside markets weren't moving so much, maybe people would have more patience. But I think there's a lot of retail people, a lot of news, a lot of people getting out of equities into things like gold, obviously trying to find safe havens because there's just too much uncertainty. So far we've been we meaning grain market's been kind of insulated, but I don't know if that will stay the case for a long time if we don't start getting some news or, I don't know.
Yeah, definitely. But something we got a close eye on there. We've got a couple of minutes here, Ryland. Looks like we've kind of moving on from cattle on feed back to tracking equity markets in the cattle. And it was overall a pretty quiet start to the week for hogs. So maybe share a few thoughts here this morning.
Yeah, it just seemed like the report came and went. I think, like you said, we kind of rallied to start yesterday and then just kind of finished, back lower, kind of snapped the winning streak. I mean, market was straight up all last week, and sure enough, I'm back and it starts to head down. So I don't know what that means. But overall, I mean, like the news wasn't terrible. We got choice beef up 2, select up 322 yesterday. I think that's a lot of optimism, just kind of looking forward. Just considering we had a pretty light kill. So it looks like the packing industry probably wants to keep beef prices supported here for the most part with these lighter kills. And I think generally that'll add a little bit more optimistic tone to cash, but we'll see. There really hasn't been much indication on the live side of the market. So just waiting to see. I mean, obviously the cattle market is not impervious to what's going on in the outside markets, but the fundamentals really are the fundamentals. I mean, I think we'd expect beef prices to stay pretty firm here and just kind of underpin for the time being. Obviously, the story is still really good, but there's a lot of concern just about heifer retention and if we're going to start expanding. I mean, just going through break evens yesterday with several producers, we do need the back end of the market to strengthen to kind of guarantee profitability. So we're in this kind of area that is a little bit shaky. I mean, obviously there's ways to hedge, to prevent major loss, but I think that's something to keep in mind. We'd like to see, 203, 204 plus back there, and we're just not seeing it yet. So hopefully we can keep cash market supported in the interim. And yeah, on the hog side of things, definitely light. Not really much to go on right now. Same kind of price action. We just kind of made a new high for the move and then fell back a little bit. Bellies were lower. I think you just had kind of a weaker cutout tone, just kind of souring expectations and some outside bleed over. So we got a cold storage report on the 24th on Thursday. So we'll see if that looks to change anything. Otherwise, the lower dollar is something I think to keep in mind here from the export side of the business. So if there's no real interruption with new kind of trade tariffs or anything like that, I think there is a little bit more kind of outside support in our opinion. So we'll see how it goes. Overall cash is just kind of up 24 at 83.59. So
Yeah,
we'll see how that plans out.
Quick question, Ryan. Anything enticing in LRP, the LRP markets? I mean, still seeing some good stuff there, good opportunities.
Yeah, absolutely. I mean, like I said, going through producers, break evens. I mean, obviously those are on the table. I think we found a little bit more of the advanced strategies to be appealing here, just from the options market, just because there's a lot of time back there. And there's a lot of things that you can do, obviously, with varying degrees of risk tolerance. But right now, I think in order for the LRPs to to be a little bit more appealing, I think you'd like to see some new highs here across the board.
Sure. I appreciate the update there, right? Just come into the open here. We got May corn down 2 1/4, 479 1/4. May soybeans are up 4 at 1033 1/2. And May Chicago wheat's down 5 3/4 at 532 3/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.